Grant Cardone and Gary Vee, I'm struggling here because you guys are bright guys. You give good advice. You're typically on the forefront of thinking, but right now you're telling people things that make no sense. I'm going to go through what the numbers are and what you've said in the past so that people can get a better idea of when they follow leaders in our industry, whether they're on social media or somewhere else. Sometimes things that they say just don't add up. Hi, I'm David from NFM Lending. I'm part of That Mortgage Couple, and we're going to dive into what the numbers are. I'm going to start first with what Grant Cardone said. He said just this month, he said, hey, if you're not a multi-millionaire, do not buy a house unless you can afford to waste money. Well, it's not the first time Grant Cardone has come out and said something along those lines, that you shouldn't own a home. As a matter of fact, he said back in February 11th, 2016, he said, you should not own a home unless you have $20 million in the bank. Now, I don't know about you. I don't have $20 million in the bank. My guess is most people don't have $20 million in the bank. And nonetheless, he even said you should have it in the bank in cash. Come on. You're saying you shouldn't have owned a home since 2016 to today. Well, he gives an example in his comment from August. And here's his example. He says, if you purchase a home for $100,000, you put $5,000 down, 10 years later, the home sells for $200,000. Okay, great. You think, got myself a good profit. Seems like a big profit, but he's saying, well, you turned 5,000 into 100,000. Well, he's saying, consider other costs. Let's say 6% interest, which interest rates aren't quite 6%, but let's just assume, for example, that that's where interest rates are. So let's say 6% interest, and he says over a 10-year time frame, that translates to $60,000. That's incorrect, and I'm sure Grant Cardone understands how interest works. It does not work on a level line. It works in a descending line, which means you pay more early on and less as time goes along. But nonetheless, let's assume his numbers are correct. So $60,000. 10 years of property taxes at 2%, $20,000 real estate, 6%, $6,000 when you go to resell that home. So the actual cost before maintenance, he says, is $86,000. Well, that sounds kind of expensive, right? He says, well, the average profit then is only 14 grand or 1.4% per year. So clearly you shouldn't own a house unless you have your $20 million or can afford to waste money. But he's overlooking the plumb obvious anybody who lives in my reality or your reality can see what he's overlooking. He's overlooking really simple. You've got to live somewhere. So if you live somewhere, now I've got kids, I don't want them in my basement forever, right? I want them to have an apartment. I want them to live on their own. So let's say you're spending $1,500 a month for those 10 years to rent. Well, you have a cost associated with that. So assuming that rental increases are 6% a year, you'll have spent over that time frame with 6% increases, $237,000. So in reality, you have a 500% return. If we look a little deeper at that math, in 2016, a home price $300,000 was what the average one was. With 10% down, so a $30,000 investment, by 2022, that was $516,000. That is a 72% increase in the price of the homes, and that's coming from the Case-Shiller Index for national home prices. So that translates to a 720% return, which is $216,000. Now, I don't know about you, but $216,000 is a heck of a lot of money. And while it won't put $20 million in my bank, it certainly gets both the kids out of the house and it gives me peace of mind in the future that home prices have grown. Well, now Gary Vee is saying the same kind of messages. And this is what kills me. Gary Vee says, hey, I think the American dream should not be owning a home. It ought to be something more like renting. And that renting and kind of owning a Lamborghini are sort of the same sort of thing. He says, like, I know you're driving a Lambo. It's my thesis as to why it will actually fall. So he's saying, wait a minute, a Lamborghini's prices fall, and so a home price falls. Well, now he said this comment in February 2019. And he says for him, he's decided he is only going to rent. Well, if we look at what home prices have done since 2019, in 2019, the average home price was $400,000 with a 10% down, assuming the Case-Shiller index grew over those couple of years from February 19 to present. That was a 48% gain. That's $592,000 for the same home, or a 480% return, which is $192,000. When you factor in the gain and the exchange of what you're not doing with rent, that's when you start to talk about what the everyday consumer, not the multimillionaire, but the everyday consumer is having to live. Am I going to rent or am I going to own? And at the end of the day, some of those people who we follow so religiously, and I follow both of them, and I respect what they have to say, but I don't respect when they overlook the obvious, which is even if you took a bunch of those people out of the rental market, or out of the housing market, and you said, go rent, those people are going to drive up the price of rentals, which makes it unattainable there as well. Look, you have a choice of who you want to follow. I totally get that. And maybe you follow for others for certain financial advice or industry advice. We try to provide untarnished advice, which looks at what the market is doing today, what we anticipate it to do tomorrow, and where it's been in the past. So like and follow us for more. Appreciate your time.